Moving on to some business news now. The dollar held onto recent gains on Wednesday, supported by higher Treasury yields, as strong US economic data diminished the likelihood of further Federal Reserve interest rate cuts. The greenback rose to a near 6-month peak against the yen after data released on Tuesday showed US job openings unexpectedly increased in November, although hiring softened, suggesting the labour market slowed at a pace that probably does not require the Fed to be in a rush to cut rates. Meanwhile, growth in the services sector accelerated in December, boosting business activity and pushing prices to their highest levels since early 2023. Investors are now focused on Friday's monthly jobs report, one of the last major data releases before the Fed's upcoming monetary policy decision. For more, we're joined by Farah Murad in Dubai. She's a senior market analyst at Equiti Group. Good to have you back on TRT World. Farah, now, was this data a surprise for markets? And what does it suggest about the state of the US labour market?
I mean, the reaction shows that it is a surprise. First, we have record increase in price index in services, and we have way better than expected job market. And I can see not only this pressure that we're seeing on indices, but even hedge funds, dealers, they're moving towards hedging with the VIX index. It went up by over 5% yesterday. So yes, it is a surprise. We're moving towards hedging these I wouldn't say unexpected, but at least we were seeing the sequence of less inflation pressure, a little bit of bad data in the labor market, and now we're back again of this fear. What would the Fed do when we have inflation pressure from one side, but also the job market is really doing good somehow, and that's why the markets are a little bit worried and surprised.
Right, and the Fed does have its next monthly meeting coming up where we're expecting a decision. What are markets currently pricing in?
I mean, even before this data, we're pricing that we would keep interest rate steady. There's no change, no a huge change in the policy for now. And I think this is even more emphasized. We believe that there's no way to maybe see cut rates in the upcoming meeting. Now the question would be for the next meeting in March, are we going to see a drop in interest prices? I think we might have been a bit more expecting a bit more dovish stance from the federal bank. I think we might at least for the first quarter see a bit more hawkish stance from the federal bank and keeping interest rate as long as definitely the job market is showing signs of strength and inflation pressure remains, which I think might be the main scenario, at least the first quarter with Trump in office.
And investors are awaiting that December jobs report, which is out on Friday. What's your outlook?
The forecast now is at least to see a bit of drop around 160K from over 200,000. So in case the numbers comes as expected, maybe the markets will be a bit more balanced. We wouldn't see this huge volatility. But if it comes as a positive surprise, then we might continue seeing the VIX index being a way to hedge against this volatility. We might see a move towards more, I would say, the green, definitely the dollar, the gold. We need to see what Friday will bring. But the most important thing is not only the number of non-farm payrolls, but also unemployment. Is it way above 4% or not? And the wage. That's pretty much the most important numbers in the report on Friday.
Okay, Farah Murad, we will have to leave it there. Thank you very much for joining us.